Hey everyone, it's been a whirlwind August and there is no slowdown in sight. This week on Great Chat, we are asking, is hustle culture back to stay? And for those eyeing a September fundraise, we are sharing some of our favorite do's and don'ts. Today, you have myself, Ashley, as well as Sally and Angela. But first, this podcast is brought to you by Mercury, the fintech used by over 200,000 companies to simplify their finances. We are huge Mercury fans at Great Chat, and we use it to run this podcast. A few of us are also current customers for our funds and startups, not to mention the dozens of founders we've backed as VCs, angels, and scouts that run their businesses on Mercury. If you're launching a startup or fund, visit mercury.com to apply online in 10 minutes or less. The onboarding couldn't be more intuitive or delightful. Quick note, Mercury is a financial technology company, not a bank. For more details, check our show notes.
Hi, ladies.
Hi.
Anything big happening this week?
Oh my gosh, I cannot even keep up with everything that's going on, and we haven't even hit the halfway mark in August. But I know I'm very excited about what Angela thinks about the Taylor Swift drop.
Well, this week it's really just Great Chat versus the Taylor and Travis podcast. So we'll have to see who gets the most views tomorrow. But yes, it's been very exciting to see the album drop happening, and also just as a Swiftie, I'm really happy that she looks so happy on the clip from the podcast. Like, I hope
It's
she's
very
always
cute.
this in love.
It's very sweet, and just like the collaboration across podcasts and show, it's fun. But I mean, the barrage of news, I know we talked about some of this the last few weeks, but maybe the one that caught our attention this week in our group chat was the Cognition CEO um, email to the team. What a hell of a weeks the Windsurf team has had. So the latest of that is the culture is very much back. The Cognition CEO has asked the team, the new Windsurf team, hey, like you better, buckle up. I think they've asked for 80 hours a week or take a buyout to the remaining 200 of those employees. And so I don't know. And September hasn't even come yet, so I'm curious what you guys think about that.
Yeah, I think when you do something like that, of course, it sends a signal around expectations for the lack of work-life balance. But also, it tells me that they probably want some of these employees to take the buyout, right? You don't like push a buyout aggressively with that messaging to people who just started after like a total whiplash multi-acquisition journey. And so, yeah, so I think like that's kind of a clear signal that they don't want all 200 employees.
Yeah, I think it was very clear now that it wasn't the team that they were looking for, that it was actually the IP of Windsurf that they were really valuing. So look, at the end of the day, I think it's just business. I'm just also imagining the crazy like back and forth of those employees. But I don't even think it's just the Cognition team. I think we're hearing across so many of these different companies. We were talking to Helen about, someone that she was speaking to over at Meta. And it's, even the big companies are requiring people to be in the office or working, 6 days a week.
The meta rumor was that it's 7 days a week, but 6 if you're super, super high value, which is wild for a company that size. And I think that it's between that and like the recent Microsoft layoffs, kind of feels like the end of like the cushy, whatever the new acronym for FANG is, job. Like people in startups used to joke about like doing like a mini retirement or a sabbatical at Google or Facebook or Microsoft, and whether or not that's fair, like I don't know, but the perception was that those jobs would be far less taxing than startup jobs, and I don't think that's the case anymore.
The 996 culture of Chinese companies working 9 a.m. to 9 p.m. 6 days a week is now 007, which is working from 12 to 12, 7 days a week, which it's just interesting to see. And I actually wonder how much of it is driven by the fact that so many of the employees, a lot of these startups, and frankly at Meta, are like Chinese researchers, Chinese ad tech folks, and how much of that culture they're bringing and this drive that they're bringing to the companies here. I remember talking to an early employee at HeyGen, which is, a basically like a Chinese company with the US wrapper around it. And she was saying one of the hardest parts was dealing with the intense work culture. And in the early days of TikTok coming to the US, that was a big cultural adjustment for US employees at TikTok, because similar to the Chinese company, they worked 6 days a week. And that was a big adjustment. So I think this trend is here to stay.
One of the topics we wanted to talk about was the fact that there's just been also so many different product announcements with, GPT-5, the new Claude models. I was looking at the leaderboard of all the LLMs and even the image and video models. And even though there's so much focus on these US-based foundation models out here, you look at some of the performance or the benchmarks of these, a lot of them are Chinese companies. And so it is also this like neck and neck competition between China and US with the research teams. And so the intensity is certainly on. And I think in order for people to compete at the space where things are moving so quickly, products are being released so quickly, that you have to, you just have to be, on that same pace in order to keep up.
It's such a contrast. The New York Times just came out with an article about how young computer science grads can't find a job. Like the gap has never felt so wide, where on one end of the spectrum, people are working crazy and have never been busier. And then on the other end of the spectrum, people literally have nothing to do, no jobs. And it's a weird state of the world to live in.
Speaking of all of the product launches, should we talk a little bit about the reception to ChatGPT-5? Because I think it was unexpected, and including unexpected to Sam and the OpenAI team. I think the remorse that people felt for suddenly losing access to the old models was like a more emotional response than anyone anticipated for a technology product update.
I really want you guys to catch me up. I was totally offline in the mountains with no cell reception this weekend. So I'm super behind, and I'm curious, Sally, like what the tea is on the feedback.
I was actually reading Casey Newton's newsletter this morning, which I didn't get to finish, but I think one of the sentiment was around the tone and the personality of GPT-5 has shifted. And before GPT-5 even released, when Claude released their new model, they sunsetted their last models, and they sort of did this like funeral for Claude 3, and it was just kind of this like almost like very Uncanny Valley or like Silicon Valley HBO kind of storyline. But then with this new GPT-5, and you have a very like emotional, like different personality. And especially when a lot of these, real people are using ChatGPT for real things and real conversations, and you've developed a relationship over time, and then you all of a sudden are interacting with someone new. This is kind of the new reality that the labs need to face, is as they think about building these models, that like personality consistency might be something that people are going to be very tuned to. I don't know, Ashley, what's sort of your takeaway? By the way, also before Ashley, we get to you, like I was also really excited to see so many like female AI researchers at the GPT-5 announcement. So I just wanted to make a shout out about that. But
yeah, I will say personally, as like a heavy user of ChatGPT, I have not really noticed that much, but I think I am using it for much more sort of like factual research-based tasks, whether it's personal, going down my little like health rabbit holes, or for work. And I think a lot of people are using ChatGPT as like a therapist, a companion. And so the connection with the model and with its voice and how it interacts is like actually pretty profound. And I've been like hearing stories, especially about younger generations, sort of like consulting Claude or ChatGPT on big life decisions. And it makes sense if that's your use case. The personality of the model, it's gonna feel really like sort of human, and like it's a relationship. I also read Casey's article. I thought it was really interesting, and he had a bunch of recommendations for like the model providers, that you need to like give people a couple months heads up before you take a model away. Ideally, you give them access to like prior model. It's like this whole new, like we didn't do this with like app updates or software updates, but it's like this whole new world. And then the last thing I'll bring up, which I loved because it was kind of like science fiction-y, was I don't know if you guys have followed Rune. He's like this shit poster guy. But he was saying that a lot of the protests about, I think it was GPT 4.0 going away specifically, were like written by, like he could tell they were written by that model. And so to him, it actually felt like the model was advocating for itself through these like users.
Wow.
Like, and I was like, oh my gosh, wow, like we are in Black Mirror right now, where the model is like getting the humans to share its its case for letting it stick around. So I haven't done that research myself, but I was like, that was my oh shit moment of the morning.
Oh my gosh, literal chills. That's terrifying. And also like this is now a conspiracy podcast and I'm here for it. So
I think we'll have a lot of fodder if we want to go down these conspiratorial rabbit holes.
I don't even think a lot of these is conspiracies. I was just talking to a friend who has a startup in the SaaS space, and he's been coding just various agents who are now managing a group of agents. And so he's got 4 agents that have a team of 10 agents that they're tasking them to do things, and the interaction between the like various agents and one trying to like punt off work to the other, it was just like, it felt very, very Black Mirror, but it's happening at all these early stage companies and soon adopted across, I think, pretty much every company and startup. So I don't know, it was just fascinating to hear. They spun these agents up within like a day. Speaking of all the models, do we want to talk about, Cursor and all these coding apps and all the negative margins? I don't know, Angela, if you saw that story. And what I thought was notable, which I didn't see much pickup on, was the fact that the Cursor CEO was on during the GPT-5 announcement, working with GPT-5. And then I saw that I think it's 1/5 of Anthropic's revenue is coming from Cursor and Copilot. Be curious to sort of see like how that transitions. The pricing of GPT-5 obviously is in much topic of debate. But Angela, I'm curious what you think about that.
it's so interesting. I feel like there was some large group chat with a bunch of journalists that all decided to publish the story about negative margins at coding companies this weekend. It felt like there was a lot of press coverage around it, and it's something that we talked about in our group chat. And to me, it's reminiscent of 2021, where VCs were essentially subsidizing all these companies, and like a 100 million ARR company in actuality was probably just a 10 million ARR company with a lot of VC subsidies. And it feels a little bit like this in the coding space too, which is there's a question as to how durable that revenue is when it's really like Thrive and Andreessen that are subsidizing it for the whole community. And so I think it's interesting to think about from the perspective of Cursor and Windsurf and others, but also what was less covered in these articles is, to your point, Sally, like the implications for Anthropic, because I do think that this is a substantial portion of Anthropic's revenue. And if this revenue could go away when the funding environment turns or is not very sticky, then it's not very high quality revenue. And so it's interesting to think about given Anthropic's raise right now as well.
I keep hearing more and more people want using Claude Code directly more so than Cursor. And that's the other debate, I think, is that none of these engineers using these code products are loyal to one product, and it's quite easy to move back and forth. And so we're sort of still in this early stage, and OpenAI also released their own version of code. I forget, it was called GPT Code or something. It could look very different in 6 months, 12 months, where even some of the high-flying companies, where they will be, in a few months. So the battle is heating up, and, Cognition, Windsurf, obviously another player in that race. So.
Yeah, I mean, I'm obviously biased, but it's just interesting how quickly the news turns. I mean, Cursor was unavoidable in conversation in the press for a period of time. And then the drama with windsurf, I think everyone felt like OpenAI was really slipping behind Anthropic. But then with the release of GPT-5 and these questions around, the sustainability of the business models of all these companies, it feels like the narrative is turning. And to your point, it's going to continue to go through twists and turns. So it's a very, very exciting time.
Clearly not a slowdown in August, but I know a lot of founders that we've all been talking to are getting ready for fundraising in the fall, starting September, and it's going to be very busy with fundraising events. Our calendar is going to be in full swing, so we thought it'd be a good time to dive into maybe some of the good practices of running a successful fundraise. I think it's also important to note that there's no one right answer to any of these. It depends on company profile, it depends on CEO, the prior relationships people have. But I think just bringing some of the things we've learned along the way, things that have worked well for founders based on their performance. So maybe just the first question is starting with the prep that goes in before kicking off an actual fundraise. How should founders be thinking about, okay, in 2 weeks, in 3 weeks, I'm going to start fundraising. What needs to be done?
Well, hopefully you're not starting to think about it 2 weeks before you're starting to fundraise, because I think that would be a pretty tight window. I have a bias for the extreme early end of the spectrum. So, Angela, I think you're going to have very different expectations for what kind of information founders bring to a fundraise at the growth stages. I would say the number one most important thing is don't test out your story in pitches. For pre-seed, which is, where I'm primarily focused these days, a lot of times it really is the narrative that you're investing behind. There's a deck or a memo, there's a founder, there's their personal story for why them, why this problem, why now. And you can tell when someone is really comfortable telling that story with high conviction and really clear thinking and depth of thinking. And, sometimes someone's just a really natural storyteller and super charismatic, and that's where they spike. But everyone can get there. I think you need reps, you need feedback loops, you need people to push you and ask you hard questions. And so I think if you're a very early stage founder and you're raising your first institutional round, ask some founder friends, ask some VC friends who maybe this is too early for them to go through your pitch with you. If you have some angels on board, have them help get you ready. But I think it's, when you are this is your world, you're thinking about it every day, taking that and making it a story that's accessible to someone who isn't deep in the weeds with you is not necessarily a natural thing. And so yeah, getting your reps in. Sally, you've done this on the founder side. What did prep look like for you for your first fundraise?
For the first fundraise, we hired a deck designer who was well regarded from, they were spun out of first round capital. I had a lot of founders who have used them as well. And that really helped with the narrative and storytelling. I will say, I was also talking to a friend of mine who just raised his company. They just raised $10 million on a 4-page memo. Not an AI company, and from a top tier fund. And so, as you do this narrative thinking, you got to do what works for you. He walked me through the storytelling, the memo, and it really resonated well. And it was very clear on the market that he was going after. I think for us, we almost early on relied too much on the deck narrative that someone else was helping us put together. And then we actually, through the repetition that we had done, we did a lot of practice runs. Actually, Angela, we came into your office to do a practice run with you and one of your colleagues, and that really helped us really sharpen the narrative. And that takes a lot of time for you to really hone that out. And I think that also bleeds into when you actually do start a fundraise. You want to reach out to some of the, not the top, tier one funds at the very beginning. You want to space it out so that you have, you're going to get similar questions and similar repetition. And so, use that as sort of like a next layer of practice rounds where it's like lower stakes. And then by the time you're in week 2 or week 3 and talking to the top tier funds, you're really crisp about your story. You know the questions that you're going to get and you know how to answer them in a succinct way. And I think that's some of the mistakes that I've seen is they're like, oh, I want to talk to the Sequoias and Andreessens and the, Thrives of the world. And they line those up first, get really excited about it, and then they sort of fumble because they're getting asked the questions that they're not prepared or they haven't formulated in their head in a succinct way.
Maybe a very tactical suggestion I've also heard from the founder side is just to make the life of the investor easier. Like every firm is going to have some template or format of an IC memo that has, like the addressable market, the, innovation in the product, the team. And if you can package some of these points in a way that's very easy for the investor to pour into their own IC memo or process, people like shortcuts when they can find it. And so if you can weave that into your narrative structure, that sometimes just makes it easier for everyone as well.
So the time has come that you have all prepped, you're ready to go, and you're ready for your outreach. If you don't have a warm intro to a fund you want to talk to, what's the best way forward? Should you do a cold outreach? Who should you reach out to, and how should you strategize? Ashley, your thoughts on that?
Yeah, I mean, venture is very much a warm intro industry. And part of that is just there are so many startups pitching at any given time. And VCs are looking for any sort of like shortcut to see signal. My hot take here is that a lukewarm intro and like a forward from someone who doesn't really care or like even someone who passed is way worse than a good cold email. Because that is signal on its own. And so I would say warm intros that are enthusiastic are amazing. I mean, the best kind is like, Sally, if you've backed someone as a scout and you're sending it to your favorite investors and you're like, this person is amazing. Like it was the easiest yes I've said in the past, like 2 years. Like that counts for so much. If you're just forwarding, you're like, hey, this person wanted to chat. I'm like, I'm not investing. I'm not taking a look, but like just passing along in case you want. I just like, I don't feel like that's helpful to founders. And I get a lot of requests to make intros if I'm not investing. And I always try to be really clear. Like I'm willing to do it. But if you can find someone who like knows you and is excited about you and can really like bring a lot of enthusiasm and authenticity to that intro, it's so much better. Otherwise, great cold email that's really thoughtful and shows you understand what that investor cares about, what they're focused on. I mean, we've invested based on cold emails, cold DMs. Like I'll take those any day over like a very sort of unexcited warm intro.
Yeah, I agree with that very much. I'm talking to a founder right now who's looking for who's starting their fundraise, and I'm super excited about what they're building, and they have a really great track record. It's such a different, even just the tone of how I write the email to forward to an investor that I respect, for someone who I'm really excited about versus someone who has asked me a few times where I've been pretty clear of like, hey, if, I'm happy to, but if there's another way forward. I think also just in terms of intros and things, this was a topic that came up in our group chat about, getting intro to, associate versus a general partner. And I think that's I think some people just want to be intro to the head of the fund, the like headline name. But it's very different how things are triaged. So Angela, maybe just given your background over at SoftBank, what your thoughts are on how you guys, triage some of the like founder intros, the like first level of diligence.
It's a good question. I feel like this topic has come up in a few group chats recently, so there's something in the water about this topic. I think it probably really, first of all, just depends on how your fund is set up. I think at most of, I'll call them like the bulge bracket VC firms, the associate network is very strong. Like everyone's on the same group chat, everyone's in the same email list. Like if you go pitch Lightspeed, the associates at Andreessen and Sequoia and Thrive will know about it right away. And that's actually how like a lot of the whisper network in venture gets passed around. Associates are generally more flexible about sharing information, and they're like, chatting all the time. And so I actually think it's a really powerful network if you tap into it correctly, because they'll be in the flow in a way that a lot of the general partners aren't in the same way. So I think associates can really be your friend. In general, I think the most successful entrepreneurs I've seen understand that it's important to have relationships at multiple levels. Like if you just have relationships with the top person, there's only so many requests you can go to. If it's, let's say, at Andreessen, if it's Mark Andreessen, you can't like text Mark every 5 minutes when something goes wrong. Like you need to have a relationship at the working level to be like, where's a term sheet? Like what, and so I just think it can be short-sighted to only focus on the check writer. I think it's really important, but I think you gain so much from having relationships at a lot of different levels. And like at the larger firms, the associates are the ones that are writing the memos, that are building the models, that are going to be advocating for you. And so you definitely want them on side. But I think it's not either or. It's important to have relationships across the board.
Oh, just a fun little tidbit. Mamoon Hamid led the Series B of Box, and it was like a very early Series B. It was like 19 million post or something like that as an associate at US Venture Partners. And like basically no one else at the firm wanted to do it, but he pounded the table and sort of bet his career on that investment.
Wow.
Or his career at that time, obviously. And so it's an example. And also like was an incredible board member for so many years, reinvested when he was at Social Capital, and then of course went on to have this like phenomenal venture career. And every time this debate happens on Twitter, because it's very like people get very emotional and heated about this, there are always incredible stories of like associates who sourced deals that ended up being like fund returners. And so I think the thing I'd say that's like kind of like the practical thing is like if an associate, the super shiny founders are probably not going to take meetings with associates because the firm also isn't going to want that. And so in Box's case, they were fundraising in 2008. It was a terrible market. Like they did dozens and dozens of meetings, got so many no's. And so like that is an environment where like an associate can do a deal. He's not like competing with like GPs at other firms. And I think today, like, if you're a founder who is not like super pedigreed, like easy box checked for the shiny brands, like they're going to be more willing to spend time with associates who are super hungry and excited and maybe like really drawn to what they're building. I will also just say that as a GP of a small fund, some of my best deal flow comes from associates who like can't get deals done at their firm. Like they find founders they're super excited about. Maybe those companies are too early. Maybe it doesn't fit in like their GP's sort of sweet spot. So like as an investor, those relationships with really sharp associates who, to Angela's point, are super plugged in is something I focus on as much as I focus on like the GP and like, fund manager relationships. And so don't sleep on associates.
I would just say that this extends to board members as well. Like that, I think that's the other extension of this question, which is who should you have on your board? And I was talking to a GP at, a tier 1 fund, and he was on a board with someone from Sequoia, like a GP from Sequoia, and he joined his first board meeting, like so excited just to hear the pearls of wisdom that were going to come down from the mountain. And I think he was on his iPad for like half of it and, maybe asked one question and it depends on the company and the meeting, but it's just, people have a lot on their plates. And so it's something to consider in terms of what you need and what the right composition is for your board as well. And so maybe it's not the associate, but it doesn't always have to be the most senior person at the fund either.
And Angela, I'm curious, in a more growth stage company, you already have those relationships for years, in many cases before you start thinking about your Series B, Series C or above. How is the growth stage approach different in your mind? And how are they starting to prep, a few weeks before actually talking to Angela over at SoftBank?
I think growth is such a big category as well. It covers a pretty large, expansive companies, but in general, by the time you're in the late stage growth, you have solid metrics, you have a narrative that's gone through multiple rounds of fundraising. So people are just a bit more ready. And, it's funny, like when you walk Masa through a presentation, like his famous line is just like, show me the numbers. And so I think that's a little bit of the growth stage investing, which is like the narrative is great and we want to understand the narrative, but like show me the numbers. So if you're a consumer company, we want to see your retention, we want to see your LTV to CAC, like pretty words are great, but you have enough years of operating to see those numbers. And, of course, on enterprise, there's a whole list of metrics that people are looking for. I think the one I don't know if this is a hot take, but one perspective is the metrics can also be very misleading at the growth stage, because what you're looking for is really an inflection, and there can be bumps along the road before you hit that inflection. So we invested in ByteDance in 2018, and at the time it was really expensive. And the first quarter after we invested, the company missed our IC case, which was like a big deal. And in hindsight, it kind of was like not even a bump, because the company has massively outperformed anything that we had put on paper. But it's a good reminder that like metrics are important, but metrics can also are just they're revisionist history by nature. And so it's hard to extrapolate to the future. And that's the dynamic that's difficult, because I think every good company will look expensive at the time that you invest and very cheap in hindsight, but not every expensive company is going to be a good company.
One thing we did as a sort of a hack was we raised a friends and family / pre-seed that was an uncapped. We raised about $5.5 million. And in the interim, as we were thinking about the next stage, we were sending investor updates to our investors, but we actually also sent out a redacted, much shorter version of our metric, because we were converting all of our pilots. We had a lot of customers that were signing on. And so we sent that to some of the investors we had relationships with, whether they were, we've had multiple meetings, or we had, in past had relationships with, and that really helped us accelerate as we were getting ready for the next round. Because they knew that we were seeing momentum. And so I think it doesn't work for every company, but if you are seeing some early traction and whatever that metric or that storyline you want to tell, so that by the time the fundraising timeline comes, you can move a lot quicker. And they've already done some pre-work going into that meeting. So I think that was really helpful for us. Ashley, what about you in terms of like, what's some of your like favorite good narratives you've seen in companies that you're like, I got this right away, I'm super excited about it? Or is there like a template for everyone?
Yeah, there definitely isn't a template for everyone. And I think every investor has like certain preferences whether they admit it or not. I think the easiest thing to get excited about is like a company where it's so clearly that founder's life's work, right? Like everything they've been doing has been leading up to this moment. They're obsessed with the problem they're going after. They have like a unique insight. They have an unfair advantage. And it's interesting. I've been thinking a lot about this because we're in this like AI gold rush phase. And so I think a lot of people are just excited about the moment, and they're looking for, there are some like real low hanging fruit opportunities. If you're good at growth, you can get some traction. And not to bash that, like there are going to be some massive companies built off of that. But I think my preference and sort of our preference as a partnership is founders who have like this like really deep driving why for what they're going after. And that can look so different for different type. It can be an enterprise why, it can be a consumer why, like, it can be something that is very like mission driven. It can be like a chip on the shoulder. Like there's so many different sources of that. But for me, that's like, especially at the stage that I'm investing in, it's such a founder bet. And a lot of times, like the markets, if they're successful, are going to change meaningfully. And so you just have to believe that this person, like the company is going to change, the dynamics are going to change, the competitive landscape is going to change. So like what is going to keep this person going?
So this week's Q&A, we're going to do a little rapid fire style. So I'm going to just yes, no, or quick response from each of you. First one, should you take money from scout checks? Yes, no.
Yes, but only if you're excited about the scout, not the firm.
Fundraising, deck or memo?
Both.
Whatever most aligns with your strengths.
Should you pre-share the deck ahead of the first meeting? Yes or no?
Yes, but it's a different, shorter deck where the whole purpose is just to get the meeting.
Angela?
Oh, I like that. I would just say no because I think it's just more helpful to have the context. You don't want someone to read the deck and then come to a view before you even have a chance to talk to them.
I like the shorter deck. I've done that a few times. Okay. Time of day or time of week, does it matter? Yes or no? I get tired Friday afternoon, so maybe not afternoons for me.
Not for me. I actually love Friday afternoons because I'm not like buried in my inbox and whatever. So, but a lot of it can be helpful if you know when their partner meetings are. Like it's good for them to go in fresh. And so ours is Tuesday night. So I love if I get like a Monday or Tuesday pitch because then I can like go into my partner meeting and like update my teammates and everything feels, just feels really fresh and relevant.
And then last one, should all co-founders be at the fundraising meeting or divide and conquer?
Ooh, I think all co-founders should be at the fundraising meeting because I would imagine as an investor, you want to understand that dynamic and relationship and you can tell a lot from the pitch.
I agree with that.
I'm down to do a first meeting with like the CEO, but I will need to meet all co-founders to invest.
Well, I learned a lot. So I think this is a good place to wrap up.
Yay.
Yay.
See you next week.
Amazing. See you guys next week.
Thank you for listening to Great Chat. Have questions for us? Make sure to submit them at anothergreatchat.com. See you next week.